So I think we'll get started. I want to take some time to thank everyone for joining us. And as we think about some upcoming potential issues facing the economy, issues in the world, things that we want to bring to our clients, questions that we've received from our institutional clients, one of the most important topics in 2024 is the U.S. election. So understanding the potential impacts of politics on investment portfolios and the broader economy is essential to the research that our team does and essential to the process that we try to bring to our clients. So our call today features Libby Cantrill, head of U.S. public policy at PIMCO. Libby's, as I mentioned, the head of U.S. public policy and then one of the managing directors of PIMCO's portfolio investment group. In her role, she analyzes policy and political risk for the firm's investment committee and leads the U.S. policymaking engagement and policy strategy for the firm. She also works closely with the Global Advisory Board, which is led by former Federal Reserve Chair Ben Bernanke. Prior to joining PIMCO in 2007, she served as a legislative aide as a House of Representatives and also worked in the investment banking division at Morgan Stanley. She has 20 years of investment experience and holds an MBA from Harvard, as well as a CFA and an undergraduate from Brown. She's regularly seen on Bloomberg and CNBC. So Libby, thank you so much for joining us today. Additionally, Michael, most of you all know Michael Dow or should know our Chief Investment Officer, Michael Dow. Michael and his team oversee all the investment management at the firm, including asset allocation, macroeconomic research, investment manager research, and the ongoing portfolio management for our clients. So Michael, I'll turn it over to you for some opening comments, but Libby, thank you again for your time today, and we look forward to the discussion.
Jesse, thanks very much, and Libby, thanks once again for joining. We want to get right into the meat of the presentation. I presented last month on the election and implications for markets and for the economy. And my conclusion there is generally elections don't have a lasting impact on investment portfolios. So I want to just lay the groundwork here and suggest that while it's impactful, it's important, and there's probably 3 or 4 main areas of concern. And Libby, you're going to talk about all of these, I suspect, which would be tariffs, the budget deficit, the independence of the Fed, and perhaps other areas of concern and difference in the potential policy mix in the outcome. I just want to reiterate, our main mission here at Beacon Point is to identify policies as opposed to get deeply invested in the politics. Unfortunately, politics dictates the durability and the impact of certain policies. So it does matter. And what matters most, perhaps, isn't who's in the White House, but who controls the government in terms of unified or divided. That is, who's in control of the House and the Senate. And there's a lot of cross currents. This has been a roller coaster ride of an election. And 2024 has been the year of the election. Fully half of the globe has gone to the polls in 2024 in democracies across the world. So this is a very interesting year. Globally, it's certainly been an exciting and interesting year here for the U.S. election season. I'm just going to turn it right over to Libby and ask her to take us through a few slides and give us her perspective on what's happening in Washington and what the implications are. Libby, thanks very much for joining.
Well, great. Well, so nice to be here. Beacon Point has been a long-standing trusted partner of PIMCO, so we so appreciate the opportunity to present to you today. Let me just share my screen if that's okay. Let's see here. Okay. Hopefully, folks.
We see it. Yep. Thanks.
Wonderful. Okay, so let me start out with just talking a little bit about the horse race, where we stand today, and what folks should kind of pay attention to over the next few weeks. Mercifully, the election's only within a few weeks now. It has been a very long general election cycle, I think, for most people, but particularly if this is your job. But we're in the final stretch, so to speak. So talking about kind of what to pay attention to. And then importantly, sort of Michael and Jesse sort of both previewed talking about the implications from an economic perspective and from a markets perspective. I'll kind of reiterate the spirit of what Michael just said, though. We really are focused on what is likely to happen, not what should happen. So we really don't overlay any of our own kind of political or partisan beliefs, again, really with the focus of what is likely to happen and then the impact for both the economy and for markets. So that will be the perspective that I will share today. Okay, so if we just look in terms of kind of what it has been, obviously a dizzying last 10 weeks. We don't need to relitigate it. In terms of kind of where things stand at the kind of the national level, not to be kind of glib here, but, Kamala Harris, the Vice President Harris, has really gone from sort of zero to hero, so to speak, in terms of her favorability rating. Her favorability rating was actually kind of deeply underwater, meaning that she had basically approvals of like 35% with high disapprovals. Now what you've seen is her approvals have gone up and her disapprovals have gone down. So that net favorability rating has increased. And then, President Trump has basically stayed pretty stable. It's ticked up a little bit over the last few weeks or so. He has, higher net unfavorability ratings, but again, has a pretty stable favorability rating. Now, head-to-head polling, this is as of today, actually. It shows, effectively an incredibly tight race, 2-point lead of Harris. But if you kind of are paying attention, you also know that the national kind of mood and these national polling really does not matter at all. That the way that we elect our president in the United States, of course, is through the Electoral College. And that practically means that who sits in the White House will be decided by these 7 states and, by a very small percentage of voters in these 7 states. Now, in terms of kind of where these, the polling stands in these states, if you look at the green box, what you see is that Harris is leading by some, Trump is leading some states by, other, but all within an incredibly narrow margin. The most important state here is Pennsylvania, and Pennsylvania is completely tied. Unfortunately, if you really want to kind of have a good sense of where things look right now in terms of the race, go to Real Clear Politics, look at the averages in Pennsylvania. And again, it indicates basically a total coin flip. Pennsylvania is important because it is the largest state, the highest number of electoral college votes, and it's been kind of the swingiest in terms of going back and forth. Now, interestingly, if you look at 2020 and the experience in 2020 in the yellow box, this is where on the top line is where Biden was polling at this time in the 2020 cycle versus where, how he did. What's I think quite evident here is that Biden in most of these states was polling way ahead of where Harris is, meaning he had a much bigger lead than Trump did, and versus where the election ended up. This sort of indicates polling error, the difference between how a candidate polls and how they actually do, and what it was sort of the experience in 2020 and in 2016 is where the polls really underestimated the support for Trump and overestimated it for Biden. So if the kind of long way of saying, if 2024 is a repeat of 2020, then Harris has to be doing much better than she is in these states to win. However,
Libby, here's a question. Yeah. Here's a quick question. So polling error is well understood. Pollsters are attempting constantly to try to improve their methods so that they don't have a similar outcome to 2016 when they missed it completely, and 2020 when they got the direction right but the magnitude completely wrong. So do you feel is it helpful to look at the polls at this point? And the other point I'd make, since you've got the 7 states that matter up here, there's a couple of, the way to think about the winner of the election is pathways to victory, right? Which of these states, if North Carolina and Georgia, for example, which are leaning kind of red right now, if they go red, the only thing that matters is Pennsylvania, to your point. So there's pathways, and that's what matters the most. But it's really polling, and then you got to get Pennsylvania. Is that what you're saying?
Yeah, I mean, kind of how goes Pennsylvania so goes the White House. Pennsylvania is critical. Harris has to win Pennsylvania in most scenarios. I mean, there is, to your point about kind of a pathway to 270. If she wins North Carolina and Georgia and basically everywhere else except for Pennsylvania, she can make the 270. But Pennsylvania is absolutely critical. North Carolina, I mean, I'm still skeptical that it's really, I mean, it's definitely in play. It's still a red lean state though. It is the only time the Democrats won it was back in 2008. I think there was a lot of kind of enthusiasm about 2020, and then of course Trump ended up winning it. So we'll see. I mean, I think that's kind of less likely to tip, but Pennsylvania truly is the most important thing. But Michael, what I was about to say though is that even though everyone, and the press is focused, rightly so, on 2020 and 2016 polling error. Polling error is symmetric, and this shows you kind of a measurement of polling error in the last few presidential cycles that are highlighted, and then going back to the early 1930s. And what you see is that, again, pollsters underestimated or overestimated Democratic support in both 2020 and 2016, but they underestimated Democratic support or overestimated Republican support in 2012. And so this sort of shows you that even though everyone's sort of like, oh, is this going to be a repeat of 2020? It could also be a repeat of 2012. In which case, actually, that in that case, Obama's support was underestimated. So polling error is symmetric. Again, it's just in our recent history, it's actually gone towards the Republican favors, but it certainly could go towards Harris's favor. And one thing I just think that it's important to remember is that, her strategy is to expand the voter base and get folks who are not registered, young people not registered, to register. Pollsters have a very difficult time capturing changes in the electorate, and potentially and precisely kind of new voters. This is why, both in 2016 and 2020, as you point out, they kind of missed completely in 2016 because they didn't actually capture those folks who had been disengaged for many election cycles, then coming off the sidelines and polling. So again, long way of saying polling is symmetric here. It could go in the favor of Trump. It could go in favor of Harris. And that just underscores just how close this race really is. It is going to be a super tight race, but again, most pathways to 270 for both candidates goes through Pennsylvania. Now,
so let's assume we are going to have a winner on sometime in November or maybe early December, given the voting. There's policies and there's things that matter the most. You're going to talk right now about kitchen table issues, basically.
Yeah.
How important is that?
So I think it's important. This was certainly, so there's an axiom in politics like gas and groceries, the kind of the cost of a gallon of gas, the cost of a gallon of milk. These things really matter for voters. And this just shows you, kind of the breakdown of the food component of CPI. If you actually look at kind of restaurants and takeout, these numbers look even higher, kind of 30%, 40% since Biden was inaugurated. So certainly this was a huge headwind, Michael, to Biden, right? This was like the reason why, not that they were asking my opinion, but it was a little bit curious as to why he was embracing Bidenomics when voters did not feel like the Biden economy had worked for them, because inflation basically is a regressive tax, right? It taxes everybody regardless of income levels, and particularly on the sort of on food and groceries and what have you. So this is a liability, certainly a liability for Biden, still a liability for Harris. She polls a little bit better than Biden does on the economy, but Trump still, dominates her. The other issue, I think, for her, although, I think arguably President Trump did not prosecute this as well as he could have in last week's debate, is that she's quite vulnerable on many of the policy positions that she took out, not only when she was a senator from California, but, more specifically when she was running for the Democratic primary. These things that she said, and she's on TV saying all of them, banning fracking, supporting Medicare for all, decriminalizing, the southern border and what have you. People may agree with this, they may disagree with this, but this is very much out of step with the kind of median voter in like Pennsylvania. So she's tried to sort of disavow this, obviously on fracking. She's like emphatically, really walked away from that. I mean, the debate, I counted, there were 11 references to fracking. If you don't know what fracking is, you might be a little confused as to why is this like one issue taking up so much kind of oxygen in the debate, but it was because, Pennsylvania is so important, and fracking, of course, is important in Pennsylvania. So this is kind of another sort of set of vulnerabilities. But to Michael, to your question, how much does this matter? It's sort of it's unclear or an open question as to those swing voters. Do they believe when she's walking away from these issues or not? Now, if I can just scroll to the next slide, this is also there's also kind of policy headwinds for President Trump. Of course, I think on in terms of polling, character, temperament, he really is underwater versus Harris on those scores, but also on this particular policy issue on the Dobbs decision, the decision to overturn, Supreme Court by the Supreme Court of Roe v. Wade. You saw that in the 2022 election cycle, this really mattered, and arguably Democrats did a whole lot better than they should have. They did end up losing the House, but by a much more narrow margin, and they actually expanded their majority in the Senate. This slide shows you kind of exit polling on this issue on the upper left-hand corner. On the right-hand side, this is more recent polling on this issue. Still very salient for women in particular. Women on the lower left quadrant also vote more than men. Their turnout is higher among women than men. And also women have been voting increasingly more Democratic. So, I think if Harris wins or loses, we know it's gas and groceries and, kind of uncertainty about where she actually stands on some issues. If Trump loses, it will at least be in part because of this issue, because the sort of enthusiasm, intensity around this policy issue continues to remain high, particularly among women.
So we've talked a lot about the presidential election, but isn't control of government more important for actual policy making, executive action on things like tariffs? But I hope we can start to dig a little deeper into control of Congress and the implications for the budget deficit, which there is no plan. It is large and unsustainable. What are we going to do about that once we figure out who's in charge in Washington after the election?
Yeah, so let me sort of unpack those things. I also want to talk just briefly about the period after the elections. I think that actually could be, more turbulent than maybe people are expecting. But to your point, the composition of Congress matters just as much as who's in the White House as it relates to fiscal policy. Fiscal policy, a fancy way of saying tax policy and spending policy. Both of those things have to go through Congress. So kind of who controls them really matters. The Senate, 100 members up in the Senate, 100 members in the Senate, 34 seats are up for re-election. Of those 34, Democrats are defending a whole bunch of them. And of those, whole bunch of them, 23 seats, 8 are vulnerable. 3 are super vulnerable. They're West Virginia, which basically is lost for Democrats, and also Ohio and Montana. Montana, in addition to West Virginia, probably the most important race, kind of how goes the Montana seat, so goes the Senate in many ways. But I think a big upshot here is that, even if Republicans take back the Senate, and that would be our kind of odds favor Republicans control of the Senate, there's going to be nowhere near that 60-vote filibuster-proof majority by either party. But if Republicans take back the Senate, probably 51-49. That just means it's going to be kind of a function as a guardrail to what actually can get done. Now, importantly, there are 2 exceptions to that. One is for presidential nominations. That only takes 50 votes, not 60 to approve. And the other is something called budget reconciliation. This is where everybody's eyes glaze over. But it's super important because this is the kind of the mechanism, if you will, of circumventing that 60-vote filibuster threshold. It can be used on tax bills only once a year. But it is the way that the IRA, which was basically a bunch of tax credits, got passed under Biden. He didn't have 60 votes, he only had 50. It's also the way that the Trump tax cuts got extended or got passed in 2017. So long way of saying the Senate probably flips, but very narrow control by Republicans. But again, they'll only need 50 votes in order to do some things, but not the 60 votes where they need to do all of the things.
Libby, everyone talks about the 60 vote threshold in the Senate as being quite a high hurdle for getting anything legislated. Back in 2012, the Democrats came very close, a couple of votes shy, I think, of actually eliminating Senate Rule 22, the cloture rule. Is that on the table? Are we going to see a repeal of the cloture rule?
No.
Okay, okay, that's
No,
good.
I think I honestly, so you're right though. That only actually, I mean, it's kind of like getting really into the details, but it is important. It only takes 50 votes actually to change that 60
Mhm.
vote filibuster threshold. Now, if Democrats control the Senate, again, odds low, but if they did, you might see some filibuster reform, meaning that you can't just filibuster a bill and then leave town. You actually have to be on the Senate floor actually filibustering.
Mhm.
So kind of making it the hurdle to filibuster a little bit harder, is that with the attempt of trying to make the Senate function a little bit better. But outside of that, you're not going to get an elimination of that cloture vote. It's just, honestly, it's what empowers the minority in the Senate.
Mhm.
And each party basically sees that, being in the minority within, 2, 4, 6 years. So that's why there's been sort of no movement on that. And we don't expect any movement.
Thank you.
The House, just quickly, basically 435 members of the House, all of them are up for re-election. Actually, really high correlation with the direction of the House and the direction of the White House. Right now, Republicans control the House by 4 seats. This cycle might be different, though, meaning that actually you could see the House flip to Democratic control and you could see Trump win. Why is that? Because Republicans have a lot of vulnerable seats in the suburbs of where I am right now in New York City, and also in California. So the majority will go through those seats. Those states, of course, are blue states. So you could see sort of a scenario where Harris gets a lot of votes in those blue states. That helps the down ballot races, but Trump still wins. But you still see kind of the House flipping. So if I had to put odds on all of this stuff, which I joke, Michael, this is like the worst thing a political strategist can do within 7 weeks before an election, is kind of put odds down on a piece of paper so everyone can tell me.
I got one worse for you, Libby. Everyone's asking me what the Fed's going to do in about 2 hours. So.
I know. We were all over the TV this morning telling people what was happening. So hopefully that is right. But yeah.
What did you say? What did you say? What did you say?
I think we think that it's the balance is more to 25 than 50.
Yeah, I think so. Okay, very good.
And we kind of think the retail sales numbers, probably, but
yeah, the retail sales tips the balance.
Huge piece of humble pie on that one. I think Chris Waller, he's kind of the Fed whisperer, so we listen a lot to what he has to say, and he sort of seems to be more of on the hawkish side. Anyway, so these are the odds. I am not just like punting. I'm not just trying to be magnanimous and polite to not offend anybody who likes Harris or Trump. I really do think this is like a total coin toss. But I think more importantly, higher conviction, we probably see a divided government, divided Congress, the kind of the top scenario, Republican Congress, second most likely scenario, Democratic Congress, the least likely scenario. But I think the upshot here, as we think about deficits, which we'll talk about in just a minute, and we think about changes in policy, is that if Harris wins, she will likely have a Republican Senate. And so that will put kind of guardrails on, what can get done. The last thing I'll say on the election here, and not to be a total Debbie downer, but I do think the risk of political violence, of civic unrest, is actually pretty high, regardless of who wins. Both either Trump wins or Harris wins. There's a real chance that we do not know who the victor is until a few days after the election. It will be very close. Pennsylvania and Wisconsin, they don't count their votes until the beginning of the day on the election day. This matters because if they get a lot of absentee votes, they can't even just start even processing those votes until the morning of the election. That just means that count is going to go on for a long time. It also means, really importantly here, that we could see either a blue mirage or a red mirage, depending on which votes are counted first. In Pennsylvania and Wisconsin, they will be counting the in-person vote before they count the absentee vote. Why does this matter? Republicans tend to vote more in person. Democrats tend to vote, more absentee. And so what you could see is Trump leading in Pennsylvania for those first few hours, the market ripping or whatever, however the market's going to respond. And then a day later or hours later, you see that actually Harris wins. So, or maybe not, but just know that is very much a possibility. And we could see recounts in some of these states and what have you. So
You're gonna talk about the key dates, but there's one that's not on here, and that's the certification of the Electoral College results on, I think it's December 10th or 11th, ahead of December 17th. Isn't that the drop dead date because all of the recounts, all of the states that are in play have the ability to offer a recount up until, I want to say North Carolina might be the latest, and Wisconsin, first week of December. We may not know the winner of the election for a month after the election.
These are all very good points. These are the dates up until the election, but you're right. Yep. After the election, you're absolutely right that we could actually see, now, every state has, this is why it's like so mind-numbing. This is not like one country going to vote. This is like 50 different countries with 50 different rules voting. So every state has their own recount threshold, but you're absolutely right, Michael, that if you are within that threshold, and it very well could be in some of these states, we could see a forced recount, and then we could see they're, talking about, issues around certification and what have you. So those, that month could be quite volatile.
So this is a feature. This is not new. This is a structural feature of the complexity and the lack of a central administrator to run elections in the United States. So we shouldn't be surprised by this. It demands patience and trust to get through the election, this extended, rather drawn out, hugely lengthy versus every other democracy I'm aware of. Shouldn't there be, and this is a philosophical question that we may not want to delve too deeply into, shouldn't we reform the election system here in the United States to make it simpler and shorter?
Yeah, good luck. Yes, but yes, there is, and the thing is that not only is every state different, again, some municipalities vote differently. This is the thing. This is super local, and this is like, democracy and everybody having putting their own imprint in how we vote, but it does make it more messy, and it does mean that trust in institutions, which is sort of at an all-time low, is actually quite important. Now, the last thing I will say on this, though, I'm going to plug a friend of mine who did a really interesting documentary on this. My friend Margaret Hoover happens to be the great-granddaughter of Herbert Hoover, but she's the host of Firing Line on PBS, but she did a whole kind of documentary on counting the vote. And basically reforms that have happened in these key swing states to actually improve the way that people are voting, they're processing the vote, that they're certifying the vote. So regardless of what your politics are, we all want free and fair elections, right? That is the main tenet and peaceful transition to power, main tenet of functioning democracy. And there actually have been reforms in all of those states to sort of shore up election integrity. So a lot of people actually feel like the election, in terms of the actual processes, will work well. It's more just the people need to trust it, though, in order for it to obviously have buy-in.
So we at the front of the call, we identified potential policies that were important. The deficit's got to be on the top of the list, along with tariffs and the independence of the Federal Reserve, which, again, it's Fed Day, so that might be timely. But I know the deficit and the national debt is important to a lot of folks on the call. Do you want to dig a little deeper into that, please?
Yeah, so this is, kind of regardless of who wins, like our big, takeaway for our clients has been that the deficits will be the biggest loser, kind of regardless. But I think for different reasons that everybody assumes. I think everyone's like, of course, Trump is going to be like, a car for everybody and tax cuts for everybody or whatever. And for Harris, it's going to be lots of spending. I actually don't think that will happen. I don't think there's a lot of fiscal space for additional fiscal stimulus, and neither is going to have, full control probably of Congress. But if you just look at the base case here, and these are in the green bars, the base case, according to the nonpartisan CBO, is that we are looking at deficits between kind of 5.5%, 7% over the next 10 years. Now, a kind of a bug of the CBO is that they do not kind of account for current policy, they account for current law. The difference is that under current law right now, all the Trump tax cuts on the individual side expire at the end of 2025. So they're assuming that's about $4.5 trillion over 10 years. Now, that is not going to happen. Congress, regardless of who's in power, the president is not going to let the economy go over this big fiscal cliff. And that means that even if you add back the full cost of those, then you're getting sort of 7 to 8% deficits. Importantly, this is before anything new, right? You see the Trump tax cuts extended. That's actually not fiscal stimulus, right? That's just an extension of current policy. This is before new spending. This is before additional tax cuts. This is like, holy Moses. These are huge, high deficits in a time where the economy is actually growing. Now, why is it so high? Of course, interest rates have become backed up. It's a much bigger part of interest expense is a bigger part of the budget and what have you. But the kind of elephant in the room here is around mandatory spending. This is the stuff that's on autopilot. The Congress doesn't have anything to do with. They can change the law around this, but they don't have to authorize this every year. So this stuff is like on autopilot. And the majority of mandatory spending is Social Security and Medicare. Now, these are really important programs. I think we'd all agree, regardless of your politics, but they're really expensive programs. And if you look on the right-hand side, this is the expected growth rate of these two programs. And it's like, they're gonna, as demographics here get older, fewer people pay into those programs, more people draw on those programs, they're much more expensive. So the real reason, in my view, is why the deficit picture is gonna look bad is because neither party is going to do anything about entitlements or mandatory spending. And why not? It's because, they're super popular. So if you look on the right-hand side, this is sort of the polling around Social Security. Vast majority of Americans don't want their Social Security to be touched. You look on the left-hand side, this is polling around both Medicare and Social Security. And again, younger people may say they're going to vote. They just often protest, but they don't vote. Older people vote. And this is really important to older people. So this is why, again, the deficit picture, there will be kind of no entitlement reform. I've been doing this for a long time. I've been at PIMCO for 17 years. I was looking through an old client book and I found this cartoon back from 2011, still just as apropos as it was, as it was then as it is today. It's like, yeah, both sides are basically saying we're not going to do anything to sort of on the cost or the revenue side. In fact, I think both sides have actually agreed more on this than they disagree. Democrats talk about tax increases. They actually haven't increased taxes, even though when they controlled all of Washington 2 years ago. And again, Republicans now have come around on entitlements. Now, quickly, does this matter for markets? Does it matter that deficits are running kind of 5, 6, 7, 8%? I think our view is yes, of course it matters. We're huge, Treasury, purchasers, but we don't necessarily expect what you saw in the gilts market back in 2022, where you saw the sort of violent repricing of rates across the curve. Rates backed up very, very, very quickly because then PM Liz Truss was proposing all these sort of profligate proposals and what have you. We do not expect that. So we do not expect kind of a Liz Truss moment, if you will. And why not? Because, the big difference here in the US is that the dollar remains the reserve currency, and in particular, treasuries remain the reserve asset of the world, meaning that there is going to be this sort of structural demand for treasuries and for the dollar that really just doesn't exist anywhere else. This is sort of one, measure of the kind of the dollar's dominance. This is kind of another measure of it. You just see over time that even though, despite the talk about de-dollarization and what have you, like the dollar still is king, which leads us to sort of conclude what Bill Gross, our PIMCO's founder, used to talk about, which is like the dollar treasuries, they are the cleanest dirty shirt, meaning like, you have a lot of dirty shirts in your closet. You got to go to a party. You basically grab the one that's the least dirty, not great on an absolute basis, but, much better than the alternative. And that is basically the US economy. Doesn't look great, but looks a lot better when you look at it compared to Japan or Europe or China or what have you. So long way of saying, we're not expecting a fiscal crisis. It's possible, but it's not our base case. But the last thing I will say, Michael, is that we do think that the curve should steepen. Meaning the yield curve right now is like, what? And we think it's like, should be like this. Right now, of course, the front end will come down as the Fed starts cutting, but we think the term premium on the longer end should sort of reinsert itself. So we in our strategies, if you're invested in them, is that, that we have a curve steepener kind of across our portfolios with that expectation that the term premium kind of comes back. So we're getting duration kind of at the front end or the belly of the curve, but we're underweight the long end of the curve because of that because of that dynamic. Now,
Well,
you talked about taxes. So let's talk about taxes really quickly, and then we'll talk about tariffs and the Fed. So taxes, and I just cannot, this is going to be like all there is next year. We are going to be talking about taxes ad nauseum, and that's because the individual, Trump tax cuts, again, all expire at the end of 2025. So regardless of who's in power, they're going to have to deal with taxes. Now, this is kind of our best guess. So don't send me nasty emails about how wrong I am. When this actually comes to fruition, because we could very well be wrong. But this is, again, kind of a framework for folks to think about the possible tax changes. Under Harris, there is definitely more headline risk around taxes than under Trump. And that's just because she's talked about, potentially raising the capital gains rate, raising the corporate tax rate. Neither of those actually need to be addressed. The corporate tax rate was decreased to 21%, but that does not expire at the end of 2025. Capital gains was not touched in the Trump tax cuts, but so it does not need to be touched. But you could see her trying to raise revenue through those, those provisions. And that, that could actually move markets. Now, we don't think when push comes to shove, it will be by very much. So maybe the corporate tax rate goes to 23% or 25% kind of max under a divided Congress. The cap gains nudges up a point or two. So I think a lot of this will be kind of separating the rhetoric from the reality. Trump obviously has talked about extending all of them. He now apparently supports reinstating the SALT deduction per yesterday. I kind of fade that a little bit just because it's super expensive, like $1 trillion. And he, I just don't think he'll have the Republican support to do that, but who knows? So it basically, long way of saying, there's gonna be a lot on the table next year. Even the things that don't expire will be on the table. But I think it will be really important for folks to sort of weed out the signal from the noise. Now, another kind of fancy word for taxes is tariffs. But unlike tax changes, you actually don't need to go through Congress, as Michael had pointed out in the very beginning. The Congress has ceded a lot of the authority around tariffs to the White House. So Trump can do a lot should he come back to power. Now, he has talked a lot about the goods trade deficit. As we know, in 2018, he was singularly focused on China. If you look at the goods trade deficit, from 2018 to today, basically, with China, it has gone down. Now, some of this is tariffs, some of it's not. But in Trump world, this all has to do with tariffs. And so not that he really needed evidence that tariffs work, but this does give him, kind of emboldens his team that yes, tariffs work, that yes, the trade deficit is declining because of this. Meanwhile, look at what's happened with every other country. The trade deficit is actually increased. And so this means that I think the aperture in Trump 2.0 is going to be much bigger. I think he's going to, not only focus on China, but he could focus on these other countries. Now, he's talked about putting a 10% tariff on the rest of the world. Does he do that? Maybe, maybe not. That's legally, he has less kind of a wiggle room there. But I definitely could see him picking one country or two countries or five countries, putting tariffs on them, or putting kind of tariffs on certain product areas.
Are tariffs inflationary or deflationary?
So, both. All of the above. Inflationary or destructive to growth. I'd be kind of maybe more specific about it.
Being the deflation would be the second order effect of slower growth.
Yeah, exactly. So or they're stagflationary, right, where you see actually an increase in prices plus a destruction in demand and impact on export sectors. Now, again, the devil will be in the details. This sort of shows you all the authorities that he has. I would just say, if we kind of put all that together, I'll just jump, far ahead here, then we can go back to the Fed, is that the economic impact of all of these things is kind of mixed, right? But tariffs, Michael, to your point, we have, potentially a CPI impact of, 1.5%. That's actually not even if he does the full Monty. If he does the full Monty, then we're talking 3% inflation, potentially, right? Then we'll be in the details. Do consumers substitute the goods they just stopped buying from? There are lots of open questions here, so we don't want to feign too much precision. But you could also see this impact to growth, for our conversation, that you actually see some demand destruction plus potential retaliation of countries on, on China, or sorry, from China to the U.S. and other countries, which could also, hurt export sectors. In terms of kind of other areas of impact, obviously, green here is good, red is bad, or red is headwind, and then yellow is sort of status quo. Immigration is also kind of a mixed bag, right? Stopping the flow of immigrants. People might agree with that policy, they might disagree with it, but it does have economic impact that could, again, hurt GDP. As like the second that migrants come into this country, they start consuming, right? So that means that they actually do contribute to growth. And they might be contributing to some deflation as well on the workforce side. I think that's harder to kind of weed out. So kind of bottom line here is there's good, tax cuts will be good, from a risk appetite perspective. This idea of deregulation also a positive, but there are also some headwinds. Just before I talk about the Fed, Harris is more kind of status quo, obviously. Just this is more of a continuation of the Biden administration. Maybe you see some more regulatory headwinds. I do think that some of her comments have been interesting. First of all, if she has a Republican Senate, that means that she can't like renominate people like Gary Gensler or Lena Khan or what have you. So that will just be kind of put the brakes on some of that, regulation that we've seen, sort of very ideological regulation. But even if she has a Democratic sweep, I'm actually not, I wouldn't be surprised if those people don't get renominated anyway. They've been, I think more of a thorn in the Democrat side than they had anticipated. Now, in terms of the Fed, we talked a little bit about, the Fed likely move today. One of the questions that we were receiving from our clients at the beginning of this year was like, would the Fed even move in an election year for fear of, seeming too political? If you look at data, actually the Fed has basically moved in every election cycle except for 2012. They've raised rates, they've cut rates in 1984, excuse me. They raised rates right before October of the election, and they started cutting rates. So it's like they've actually done stuff in the election year, and obviously they are likely to cut today. Again, we think it's more 25 than 50, but who knows? And we do think kind of the path of those cuts and the terminal rate, the sort of the neutral rate, is the most important thing for clients to pay attention to. And in that way, we think kind of the terminal rate's probably around 3% or so. Kind of a
3% nominal Fed funds, so an upper bound, so you get 250 basis points. So 10 rate cuts would take us to neutral.
Yeah.
If you're just doing the math, okay.
Yeah.
Right, because
and
that's
what's priced in. If they're just doing 25 at each meeting, maybe they start doing 50. Our view is kind of like that the economy is slowing, not stopping. We don't actually see a lot of signs of recession. The consumer is definitely getting weaker. You're seeing delinquencies and all the kind of consumer sector starting to weaken and what have you, but like none of the flashing red that you would really need in order to get some dramatic rate cuts over the next 6 months or so. So we were, to kind of use a trader's term, we were fading a lot of the market pricing for much of this year. We thought that the market kind of had, like it typically does, sort of over romance this idea that we're going to see lots of rate cuts very quickly. But we do think you kind of could get closer to terminal by the end of 2025, more or less, maybe beginning of 2026. Now there are start doing the balance sheet, but
speaking, so just to dig a little deeper in Fed independence, I mean, there's one candidate wants to get involved with Fed rate decisions. That would be Donald Trump. The other has said the Fed should remain independent. Why is that important? And what do you think the implications would be if there was some overt move to maybe replace the chairman before his term is up, which is not clear whether that's even possible or legal? Why is it important that the Fed retain its independence?
Yeah, so a few things. So one, just maybe to talk about those things that have been talked about in the press. And to be very clear here, Trump cannot fire Powell from the Fed. That is very clear. It's statutory, means legal. He can only fire a governor from the Fed for criminality, for cause, but that's defined as criminality. So Powell is going to stay on the Fed one way or the other. Now, what he may be able to do, and I think what you're alluding to, is maybe he'll be able to demote Powell from the Fed chair. But it doesn't really do anything, because look at this Fed. There's no vacancies on the Fed. So it's not like he could demote Powell from the chairman and then get somebody else in and then like upgrade them or whatever, promote them. Like there are no vacancies. So the first vacancy on the Fed is not until January 2026. That's Adriana Kugler's term. And then to your point, Powell's term doesn't come up a little bit later into that spring. So our view is Powell's not going anywhere. Trump knows this and Trump's team knows this. He can't fire Powell. A change of, a difference in view about monetary policy is not criminal, at least not yet in this country. And the first time he's actually going to be able to kind of inform the direction of the Fed is not until, early January, assuming in 2026, assuming all these folks stay on, which, all indicated that they would. Now,
we can assume, I'm sorry, Libby, to interrupt. We can assume then that that's campaign rhetoric meant to perhaps appeal to a segment of the population that doesn't fully understand that Fed independence is probably the single most important feature of a central bank for inflation fighting purposes and credibility, right?
Yeah, I mean, yes, exactly. And we've obviously had an independent Fed. Now, there have been times in history where the president has jawboned the Fed. And in fact, if you look at modern history, this is just a kind of a norm that's just really taken place since the Clinton administration to not, put pressure on the Fed. So Clinton didn't, Bush didn't, Obama, blah, blah. But actually, if you look back to George H.W. Bush, obviously Nixon, there was a lot more jawboning. But still, the Fed has remained more or less independent. So it is a kind of a hallmark to Fed to inflation fighting to on the growth side as well. So super, super important. The last thing though, Michael, just to make this very clear, the president cannot opine on monetary policy making. They had to take an act of Congress. Congress has zero intention of changing the Fed's mandate. They want the Fed to be independent because if everything goes poorly in the economy, they can just blame the Fed. So there is no interest in kind of making the Fed an extension of the fiscal authorities, if you will, in Congress. So it is a bunch of campaign rhetoric. Maybe quickly, I could just talk about markets and kind of how markets have done. I think to your point, like trading the election is sort of a fool's errand because who knows how the market will react. I think the view is the market will rip if Trump is elected and da-da-da. But who knows? We just don't know. And if you look at actually how the market, meaning the S&P as defined here, performed at the year after the election, it went up in both cases, right? Actually went up for right after the election under Biden a little bit more than under Trump, but it still went up. Now, we do think there will be kind of sector winners and losers. And so if you really are interested in trading the election, we do typically sell volatility going into elections. We think volatility is oftentimes overpriced. Now, this election cycle, maybe not because of that uncertainty around kind of the period after the election. But this is sort of kind of shows you our best, guess in terms of sector implications. And what you see is there are some common winners, defense, for instance. There's some common losers. Technology will continue to face headwinds in Washington, whether it's export controls, whether it's more scrutiny on social media or what have you. But then there are some real differences between the two candidates: energy, traditional energy, renewables, financials, healthcare, what have you. But if you're really dead set on trading the election, it's better to trade sectors. Although one caveat is that even though traditional energy faced a lot of headwinds under Biden, it's actually done very well. So we're exporting, we're producing more oil and LNG than we ever have before, maybe despite some of those prohibitions that the Biden administration has put in, but still. So this is why it's, I think to your point earlier, our view is stay invested. We would say get into the active fixed income market because there are actually a lot of opportunities in active fixed income right now, kind of cash out of cash, get into fixed income in our view. But then also just be very kind of careful about trading this stuff because it's pretty specious and there are definitely different factors, obviously, that are impacting valuation.
So as we kind of get towards the end of the conversation today, Libby, and you've given us a lot to think about, I think the slides that you're presenting, at least on the markets, there is a couple of things that are coalescing. Can I just summarize in 15 seconds or less? Basically, if you want to try to match up the policies and the implementation of those policies with any administration, those that actually affect markets and the economy, it's almost impossible to do it because of the duration of policies and the ephemeral nature of the administration. That is, it's kind of, I think the larger fool's errand is an attempt to ascribe certain outcomes to basically an administration period, a 4-year period where there's no, can you get stuff done? Can you not get stuff done? Are the policies you're implementing overlapping with others? It's just kind of it's a very challenging, what I would say, data exercise to try to make that connection from who's in charge to what actually happened in the marketplace. I would make that point, and you might agree with that. The other is, then it doesn't matter. Broadly speaking, the stock market kind of ignores a lot of this, but you're right, volatility does tend to increase. If you were going to trade it, it would be in sectors. But the more important thing I think I heard you say today, and I would tend to agree with it, is the bond market is perhaps the more interesting, because the one thing you know for sure is the deficit's not going to go down, and hence a curve steepener with a higher, more persistently high term premium on the long end is likely to remain. I would have to say, I'm glad you said all of that, because it's highly consistent with what we've been talking to clients about for the last 6 or 9 months as we headed into this election season. But I turn it back to you or to Jesse, if there's any questions that we've received or haven't received, and or any comments, Libby, that you'd want to choose to wrap up with.
Yeah, and maybe the last thing I'll say, I think to your point, this could just be specious correlation, right? So so this is not necessarily causation, but if you actually look at how the S&P, the stock market, has performed over time, again, it goes up. But also that it's actually done, incrementally better when there has been divided government. Now, this could be just total specious, technical, whatever. So, take it for what it's worth. But if you are trying to view kind of a silver lining of this election cycle, know that there probably will be divided government. That looks pretty likely. And markets actually do the best under divided government. I think, Americans, just as we like checks and balances, right? We don't like kind of these partisan swings in policy. And to your point, that mean that it could have impact for those 4 years, but then it could just swing just as easily, back. So again, divided government, this sort of, more guardrails to policy changes is usually viewed as better than worse.
Jesse,
Michael, maybe for just 30 seconds, maybe just touch a little bit on the process that we go through with institutional clients, right? We have some clients, we have some prospects on the call, but I think this has been helpful to understand the importance of the election, to understand the importance of the political landscape, but ultimately want to make sure that clients know that we're not investing year to year, day to day, week to week, right? We're really looking at that 10, 15, 20-year, 50-year. Organizations should be investing as perpetual organizations. So maybe talk a little bit about the process we go through. This is part of it, but maybe the other parts of it from the macro research and things when we create portfolios and asset allocations.
I think those that have been at Beacon Point for a while have heard the story that what we attempt to do on our quarterly investment committee process is assess where we are in the business cycle and what basically try to take apart GDP, in terms of its components, C plus I plus G plus X, look at monetary and fiscal policy, and try to figure out where we are in the business cycle. And that does give you some indication of the level of risk to take within the context of a strategic allocation based on your IPS. And the strategic allocations and the investment policy statement, of course, are the guardrails upon which we implement policy, and we'll nudge it around based on our quarterly macroeconomic and asset allocation committee meetings. Not perhaps hardly surprisingly to those on the call, they're modeled directly on the cyclical forum process of PIMCO, given my participation in that process for just under a decade, many decades ago now. But it's a process that works. It works both for fixed income asset managers. It works for asset allocators like ourselves to try to figure out where you are, and then to try to see what's trading rich, cheap, and fair in an asset allocation process that occurs immediately after. The raw material of asset allocation remains macroeconomics, and macroeconomics is overlaid by what I would say an understanding and analysis of the policies that are being implemented. And the policies, the durability and the scope and the scale of those policies are, to a certain extent, influenced by the political framework. So we care about it. It's an input, but ultimately it's an input in the service of trying to attempt to assess, again, macroeconomic variables and asset allocation and relative valuation amongst a multi-asset portfolio. So it's helpful to have partners like Libby and PIMCO to assist and provide expert input and commentary, especially at Washington. It's become a very complicated place. I don't get there as much as I used to. And with having someone like Libby on the ground on the East Coast, monitoring this stuff is very helpful for us. So Jesse, is that
that's great. And Libby, want to thank you. Libby, I'll give you the last word. Anything else, anything we didn't cover that you want to sneak in?
No, I mean, buy bonds. It is a really great time. I mean, bonds are back finally this time. It's actually for real. It's not the head fake that we've seen over the last 2 years, but we really do appreciate the partnership with Beacon Point. Obviously, you all are in our backyard, and lots of wonderful PIMCO alums who work there. So nice to see everybody, and thanks again.
Great. Libby, thank you so much. And everyone, I want to thank you all for joining us. If there are questions that didn't get addressed, please feel free to reach out, contact your consultant, send me an email, and we'll be happy to follow up. Thanks, everyone.
Thank you.
Thanks, everybody. Bye now.